Hi everyone, welcome back to our weekly roundup of cryptocurrency markets for Apex signals. Let me just quickly switch charts here to the big one for cryptocurrency market capitalization. It's been 7 days since we last spoke, and unfortunately it hasn't been a particularly prosperous 7 days for wider cryptocurrency markets, and they've been on fairly steady downward decline since we last spoke. That decline obviously accelerated rapidly over the last 24 hours, and we've seen some fairly heavy hits with the top 10 cryptocurrencies by market capitalization all losing over 20% in the several hours running up to markets opening in Europe this morning. The overall market has lost $286 billion in the last 24 hours, and that's taken us down to levels last seen on November the 26th of 2017. There has been a little bit of recovery today though, and we can see Bitcoin here is back up at close to the 7,000 mark. It had dipped below 6,000 at one point, and it's good to see a little bit of recovery. Hopefully that suggests that this steep downward trend won't continue indefinitely, though it is hard to tell whether we might not see some further losses over the next couple of days. Bitcoin lost around 20%. $1,000 was shed over a just over 4-hour period between quarter to 1 a.m. and 5 a.m. UK time, Greenwich Mean Time. However, some of the other cryptocurrencies took even heavier losses. We mentioned last week that over the last few months, Ether has actually been the least volatile of the major cryptocurrencies, but it suffered a bigger loss than Bitcoin, and it was down 29% this morning, and that wasn't the cryptocurrency with the biggest loss. We can see here that NEO took a massive 36% nosedive, although it has again recovered relatively well today. Most of the major cryptocurrencies in the market in general have roughly half the losses that were sustained over that 24-hour period. So that is a slightly positive sign. And obviously, cryptocurrencies have not been going down in isolation over the last couple of days, with wider stock markets also taking a heavy hit after a very positive period. And whether that's potentially linked is hard to tell. The main driver of subdued sentiment around cryptocurrencies over the last couple of weeks has been the regulation question, and we can see more than ever how tightly correlated cryptocurrency values are to sentiment over regulation. And the big climb that we saw in the run up to Christmas from November was obviously spurred by, at least in part, by the two big regulated commodities and futures exchanges in the US announcing that they were going to start offering cryptocurrency futures, or more specifically Bitcoin futures. Now that was seen as a very strong sign that cryptos were going mainstream, and led to the euphoria that probably was a bubble in hindsight, certainly was, driving Bitcoin values up to 20,000. But the subsequent downward turn has also been very much influenced by regulatory issues and fears over mainstreaming. We had China coming out in December saying that it was going to ban cryptocurrency exchanges within the country's territory. South Korea's National Assembly has been considering a bill that, if passed, would have a similar impact on South Korea's cryptocurrency exchanges. That looks like it probably isn't going to go through in full at the moment, and over the last few days the latest news was that an intermediary step is going to be that the government there wants the identity of cryptocurrency wallet holders to be traceable. We've also obviously had India coming out over the last couple of days, and they've been saying that they won't consider payments made in cryptocurrencies as legal. That's some way short of the, full ban which has been spoken about slightly misleadingly in some media outlets, but nonetheless it's a hiccup in terms of integration of cryptocurrency payments, which within the developing and emerging markets have particular value, especially in giving people greater access to financial services. We also had China saying today, or yesterday rather, that it was going one step further, not just banning cryptocurrency exchanges within China, but also blocking internet access to cryptocurrency exchanges abroad. I think it's becoming clearer than ever that the price trend of cryptocurrencies is going to be connected to developments within the regulatory space, and that's very much connected to the sentiment around the prospects of mainstreaming over future months and years. So I would urge all of you guys who are currently invested in cryptocurrencies or still considering investing in cryptocurrencies to keep a particularly close eye on any news coming out about regulatory movements. Although there's been a lot of bad news over the last few days from in that area, there's also been many countries who've been overtly supportive of providing a safe regulatory environment for cryptocurrencies. Switzerland, for example, looking at putting structures in place to really attract ICOs to Switzerland and be a major destination. So for all the big stories around China, India, South Korea clamping down on cryptocurrencies, there's also many national economies and regulatory bodies who are looking to take a more proactive approach. So it needs to be kept in mind that we shouldn't forget that as well. But it's obviously going to be possibly the biggest influence in the medium to longer term on prices. So that's pretty much all we have time for this week. Let's catch up again next week. Hopefully we'll have seen some more positive developments this time, and happy trading, and see you all soon. Bye for now.